The market trading between Christmas and New Year's is usually fairly light. And as we saw today, the Dow was down 7 points, but as far as a candlestick investor is concerned, it opened lower and traded higher. So even though it was trading lower, it wasn't anything that was showing there was drastic selling occurring. The same scenario was seen in the NASDAQ. Even though it traded lower, it had opened here and closed here. So it wasn't like they were bailing out. They just opened it lower and traded those levels. Bitcoin stocks made a rebound today. Riot was up $6.70. A strong Morningstar type signal back up above the T-line, making the prospect of coming back up into this area fairly likely. When the market trades fairly light during this week, there will be specific sectors or stocks that get all the attention. And again, as illustrated in the text, it acts like a double-edged sword. That if there's the few stocks that are acting well, that's where the traders jump in because those are the stocks that are acting well. So that adds more oomph to those price moves. And you'll also be able to identify the consistency of sectors. As you can see in Boot, one of the retailers, nice strong trading day coming out of this little fry pan bottom. Foot Locker continued its steady uptrend on a strong day. Dillard's also indicating that probably the results of Christmas sales are going to be pretty good across the board in the retail area. So that just makes that one sector that visually tells us we could be buying in those sectors probably at least for the next few weeks until the actual sales results are reported. And candlestick signals and patterns work excessively well in the futures area. For example, notice lean hogs did a bullish doji sandwich after doing a bullish engulfing signal right off the 200-day moving average where it's supported before. I mean, this is just common sense visual analysis that if you're seeing buy signals on a major support level, that's where they're buying. How far is this trend going to move? We can see we still have lots of upside in the stochastics, and there was a little downtrending channel or resistance level that today's positive trading breached, giving us the stronger impression that we're still going to be in a strong uptrend from here. That same analysis can be applied to crude oil. The February contract, you can see, did a fry pan bottom using the 34 EMA as support. Bullish harami, fry pan bottom, and what did it do today? It broke out into new territory, making the next likely target the top of this trend channel. This makes some of the oil stocks good places to be setting some funds. The visual analysis from candlesticks make it much easier to see when it's time to buy. For example, Whiting, petroleum, the obvious resistance level at the 200-day moving average. And then our simple setup of a bullish doji sandwich with a positive open. Notice the positive open told us two things. One, the high prospect of a bullish doji sandwich, which meant today's candle was probably going to be the same magnitude as that candle right there. And two, when it opened positive, we already knew it was probably trading positive and that the 200-day moving average was not going to act as resistance. This allows candlestick investors to have their funds in the right positions at the right time, knowing that what everybody else is watching is being breached. We just had a much quicker analysis of it, knowing that a positive open after a doji, after a big move, is more than likely going to have a big candle day. We can be buying immediately and not waiting for the rest of the results. This coming year is going to make for another profitable year based upon a lot of stocks starting to move pretty strong. Candlestick analysis will allow us to identify which of those sectors are probably going to be moving the best in the beginning of the year and which ones will start rolling over so we can move to other sectors. That'll be it. We'll see you in the chat rooms.